Critical illness insurance and disability insurance are both living benefits. They give you financial support if you have a health emergency. But they are different types of insurance, and they serve different needs. Critical illness insurance offers financial protection by providing a tax-free lump sum payment to you if you're diagnosed with a covered critical illness. You can use it to pay for specialized medical treatment, pay off your mortgage, take time off from work, or anything else you want. On the other hand, disability insurance provides regular ongoing payments in the event an injury or illness impacts your ability to work. It's meant to help replace your income while you're recovering. Monthly payments can help you cover rent or mortgage costs or keep up with daily expenses. While these two have a lot in common, they're not the same. Here are some key differences. Critical illness insurance covers 25 or more specific illnesses, while disability insurance will cover any injury or illness that stops you from working. Critical illness insurance gives you a lump sum payment of up to $2 million or more. Disability insurance replaces a portion of your normal monthly income. These are just some of the key differences between these two policies. Visit PolicyAdvisor.com to learn more and compare instant quotes, or talk to one of our licensed advisors to find out what type of coverage is best for you and your family. Subscribe to Policy Advisor to learn more about your insurance options. Hit the subscribe button so you don't miss the next video.